Market outlook today for the next week. We have employment data, important employment data from the US with non-farm payrolls. We got an interest rate decision and we got crypto markets all over the place and equities kind of potentially remaining in a shaky side of things. And the overall big story, Trump and Zelensky in White House. What is going on there and how the Europeans are going to respond to that is what we want to find out and what this means for markets. Welcome to our outlook. Today is Sunday, 2nd of March. Already kind of the first important weeks for the year, nearly a quarter gone, and let's observe what goes potentially this upcoming month here of March. Data from the US, PMI data on Monday. Let's not overestimate that one here too much. Figures and in particular manufacturing figures from the US had kind of increased again in the recent month. So they look positive in a way and they might continue to look on the positive side here. So that's not of importance. We're starting on Wednesday. Wednesday is ADP non-farm employment change. The data is going to be kind of gotten into markets differently compared to the non-farm payrolls. However, some claim those figures are definitely of importance and giving us a bit of a preview on what to expect from non-farm payroll data on Friday this week. However, the market had kind of, and this was really adjusted, January's figure, basically the data from December, right, pushed out on January 8, was later on revised to the upside. We saw different revisions basically in those numbers. However, a forecast 148 and the market data for January then came out last month was better than expected. Now we got the same story. We have a bit of a weaker figure being expected. Others were kind of in expectation or in range of expectation here, and this might mean that if we see a bit of a better than expected data from the ADP employment change, this might cause the US dollar to gear up momentum. Now, looking at the greenback, the US dollar, the Aussie has weakened substantially. And now we can look at this from several factors. First of all, we have a technical resistance pattern. We have, again, this 50 moving average. Pay attention. It was kind of acting as an important resistance area. Here, resistance, the market fell. Resistance, the market subsequently fell. Here it was broken to the upside. Now, with a break, basically, we could see that this market might continue to the downside and it might continue to push the US dollar in favor against the Australian dollar. Now that said, for this market here, for the Aussie US dollar currency pair, this would mean that risk off sentiment could be here to stay. Risk off sentiment basically meaning that market participants would rather be in favor of weaker data moving forward. That said, we could see that potentially this is going to be the case here in the next couple of trading weeks, I might say. Weekly chart basically suggesting that this resistance area here, previous support here, this basically a bit of a valley market, and this area as a resistance 63.50 now causing weakness here. And now with a monthly chart, now guys, we have quite an important zone, support zone, right? And we have another support zone. However, with the month of February, this data here, now we can't see it anymore, but this market environment here might point us towards further weakness on the cards if we can break the low point here, basically the 61.30, 61.35 area being broken, the market might weaken subsequently. How to trade it accordingly? We would wait for the first week of March to potentially pass. Technically, based on that trading strategy, we would like to see a slight increase in this market to then subsequently see the market is going to weaken. Something we see quite often throughout the 5 trading days, looking at the FX market in the week. What goes up on Monday, maybe Tuesday, usually weakens later Tuesday, Wednesday, Thursday, particularly as well on Friday. What weakens on Monday quite often kind of gears up the momentum towards the end of the month. Now we got the same story here in the Aussie Australian dollar US dollar currency pair, which had been strengthening, right, most of the month, maybe a bit of a odd situation here, but towards the end of the month the market is weakening, and this might be the environment here which we like to see in order to celebrate weaker prices. Anyways, sell stop 61.35. It's gonna be the market environment which we like to observe and see how this could impact market motivation. Now, next one up, equity markets, and those ones are like extremely interesting. Why? The S&P 500 obviously kind of starting to depreciate even further, and this is going to be something important worth a consideration of potentially further fall in prices. NASDAQ to the downside, tech stocks in the US, crypto markets to the downside. Let's start with the S&P 500 now, because we've seen that looking at it, and I just put in some patterns here, basically Fibonacci retracements. Focus on the last term one, right? Support here, the market rising, and subsequently all the way towards the 50 moving average. 50 moving average to the 50 FIB retracement. Now, extrapolated to the current market environment here, basically starting down here all the way to the high point would give exactly a 50% FIB retracement at this area here, which could mean the 4,800 level in the S&P 500 could be an interesting area which we could use into consideration or take into consideration for potentially falling prices to unfold, to then see that's the next level where we might say the market might take some supportive range in this case. So that's the environment here we observe in this market, where we could see basically that the downside momentum might be important. Next one, the NASDAQ doing something similar. However, the NASDAQ is a bit weaker looking at it from this perspective. If we are building up the 50 moving, no, not the 50 moving average, the Fibonacci retracement here from the bottom, which was 2022 at the end of the year, towards the most recent high point here. So down 10,500 all the way to the up at 22,200. This would give us another important support area, and that's exactly what we've seen in the past here. Resistance on the left, and now potentially turning into a support. So if the market would fall, we would say this could be the area of engagement where we might see upside prices here, 16,500 level, to kind of resume market motivation. If again we would see that the market, first of all, falls this much, if it does, and second, if the market finds and respects this support area as well. One thing we would like to notice as well is that there is the 50 moving average rising trend line. In this case, really the 50 moving average is kind of acting here as a bit of a support coming from the bottom or from the lower area, which might act somehow positive here in this market to potentially rise further. Now, crypto markets, we have seen that they have really not behaved very nicely so far over the weekend. So far, yesterday and today, not too much in Ethereum being seen. The Bitcoin market rises. Daily chart might point to slight rising momentum further, right? The 83,000 level, at least for now, could give the market some retracement. I might say we could rise all the way, maybe towards the 90,000 US dollar level, which is where potentially next strong resistance would kick in again. If the market at least goes to that area, we would see potentially that this range here to the upside might be tested. And XRP, well, the market is not really obviously beautiful, but as we said, or as I said in the past several times, what moves up to the upside so much here quite often went to the downside again. What moved to the upside so much all the way here went all the way to the downside. Basically 80% retracement, same story. And now you give yourself the answer, is it going to happen as well in the same way? I might say totally yes, of course. At least what we see early days in March might cause a bit of a retracement. We've seen something similar here. We might be in this environment here right now with early in this month the market retraced, and we might see the same to then see the market's candlestick pattern could kind of end in this case here as quite a bearish motivation here. The next support I see at least would be the 1.60 US dollar, if not the 120 area. So this is number one and this is number two. So I have two targets. First target here, second target here, and then third target here is basically this one here at 72 cents. Somehow the breakout zone, I don't see a reason why the market should not break to the downside. If you have reasons for the markets to rather, first of all, rise further, please leave your comments under the video. I want to see what you guys have to chat about this and what your ideas in this market here in regards to the XRP market is going to be. Solana looking kind of interestingly enough quite similar to what we've seen with the Bitcoin chart. The market was building up some slight positive candlestick pattern here. Bitcoin, remember, had printed another pin bar candlestick, bread and butter trades for my trading strategy basically here. Pin bar candlestick to the downside, the market potentially rising. Solana kind of pin bar candlestick market potentially rising. Would there not be this sudden strong negative push? And this is like the deadly one we observe here. The market is really kind of quite bearishly behaving. 50 moving average, not too much charting history to be seen here. But I would say, yes, Solana is something I still like to see, and spoiler, I'm invested here. I bought a little bit and I added recently another quarter of a regular position here in Solana. As the market falls, I would add a little bit more to it. Ethereum, by the way, I've also stacked up some of the order. I'm about 20%, roughly 18% down at the moment here, given my two entries, a bigger entry at higher levels and a bit of a lower entry here. Split entry to the downside. Long-term holding, this market still looking good. We still see a regular uptrend with the 50 moving average is starting to expand here. I don't have any issues with this market basically causing further weakness potentially moving forward. Now, what we do with the oil market, that's the question. I know what I do with the oil market, but I'm not too sure how we see it as a whole and how we see and look at it from that perspective. Oil is kind of quite interesting. Is Putin now gearing up momentum in terms of world power? I might say yes, because Donald Trump basically kicked out Zelensky from the White House. He claims that, well, his at least assumption, that Zelensky is only fighting wars, or the war, claiming he would be a dictator without free elections. Anyways, in this state of the country, I would not assume that anyone in the world would really like to and start kind of imposing elections on the country. Third, basically, President Trump claims that Zelensky has not basically kind of took anything into consideration in order to fight peace. He doesn't want to give some territory back to, give some territory to Russia. That's one story, but the thousands, if not even hundreds of thousands of soldiers and the regular population are dying in the Ukraine, which is why Trump claims, look, you come back when you have ideas on how we can negotiate any potential peace deal. And that's why I'm a big time on that table as well, saying like, hey guys, you know, like, you want to continue the dying, you want to continue the suffering, you want to be on the verge of World War III, find solution, guys, the Europeans now, and they step together. Hopefully this is a bit of a wake-up sign on how to support that entire situation, not how to support the Ukraine. I've been always an advocate for this, by delivering more weapons and more weapons and more weapons, because one country, Russia, claiming to bomb the Ukraine to the ground basically, and Europe supporting, so it's just a never-ending story and might actually rather escalate in a global situation. Oil markets are important because the oil market here is simply causing further motivation in this case. That was the wrong screen. Now we got it here. The market here in this case is just quite interesting in the US oil chart. Why? Because the market's trend is still bearish. Resistance, resistance, resistance. Pin bar candlestick market weaker. A new entry we would see and find below the low point. 67.40 is the line in the sand here. Support, support, support. If that's going to be broken, I would add into my position. I already am invested to the short side of things here. This is just technical setup, which I clearly like. The market kind of is fading on a weekly basis slowly, but it is fading, and I like the pattern here, and I would like to see further weakness in this oil market, and just like to add more positioning as the market goes to the downside. That's the importance here we see now. Did we forget forget any of the markets? Well, not too much, potentially. Euro dollar kind of sideways pattern. This is not really doing anything much. Maybe the US dollar will gear up momentum again. The pound US dollar is finding some resistance off the 50 moving average. That's quite a good looking market sign. That's an old arrow. This one would be applicable right now. Buy stop above the break of the 50 moving average and the pin bar candlestick. Sell stop 125.20 below the low. The market might fall. I forgot one thing, and that's from the news side of things. On Thursday this week, we got an interesting interest rate decision from the European Central Bank. Are they going to cut rates again? That's at least the expectation. This might be something, however, it's expected, but it might be something which is pushing the euro back to lower price levels. At the moment, we don't see anything much. This is from me, or from my standpoint, a sideways candlestick pattern, which doesn't really give us anything much. It might cause the market motivation to basically weaken here, but it might also kind of start to appreciate again somehow further. If we see that the rate cut will be absent, if Christine Lagarde stating that she might impose a wait and see pattern here, this might be in favor basically of the euro. The market might start to appreciate further. That's it from that market environment. Let's check out the Hang Seng Tech Index. Because this one has moved even further towards higher levels, so that helps us. We bought somewhere at lower areas, and basically here we bought the ETF, which is looking good. Time to maybe enter. The market is just about to correct somehow a bit further. Time to enter. Maybe we see that the market is gonna weaken somehow. So for those of you guys kind of being interested here, this looks like a regular retracement. Alibaba as well, kind of retracing a little bit. But we see a shift, a huge shift from US stocks somewhere else. And why is that happening? Because the overvalued, or other way around, the stocks in the US might be taken into consideration as overvalued. The money is being withdrawn, but the money which is being withdrawn wants to find more interest, wants to find some more return in markets. Now, where do we find it? In China is the clear answer, right? Xi Jinping gearing up the tech conglomerate from his country. Basically, that was 2 weeks ago, right? Stating that, hey guys, we want you to kind of improve. We want you guys to flourish in our country as well, and that's giving market participants, traders, investors, the big money as well, positive feedback. I might say China is the one to invest as well. US are trying to find some end in terms of global ideas with protectionism, right? Tariffs are being added. China is doing it the smart way, at least into my consideration, or to my consideration they do it, and that's why I'm just following up in that path as well. So Hang Seng, Tech, Alibaba, Xiaomi, we have several companies. Xiaomi, by the way, also have started to depreciate slightly, but they all look, oops, that's the wrong chart here, that's a Thai chart. Slight technical resistance area. I might not wonder if this market weakens initially, but the upside is clear, and this market kind of looks kind of quite positive here in this case. So what do we have in general? We have maybe a stronger US dollar moving forward. We have important interest rate decisions, or one interest rate decision from the Eurozone. We got ADP employment change. We got on Friday non-farm payrolls. How are they expected? I forgot to check that. 185,000 or something, 156,000 might also gear up the US dollar again. If the number is better than expected, right, we could see a stronger US dollar moving forward. Oil markets I see weakening. Crypto markets weaker as well. Bitcoin initially might rise further. All crypto markets might initially start to rise again. Remember what I just said beforehand. What went down all the way towards the end of the month, February, might start to appreciate first in March to then fall again further. So that's the market I see here. And Bitcoin, there is some slight opportunities in this case. Else, tech, US tech, NASDAQ, S&P 500 might weaken further. By the way, silver, I was long an advocate for rising prices, but now I see quite a strong regarding negative sentiment here. Resistance, resistance, resistance. So that's the key takeaway. Silver might really start to weaken further. We have this left shoulder, head, right shoulder, head and shoulders formation on the monthly chart, pretty much long term. That's where traders like to invest or use this pattern to buy or sell the market. In this case, it's a bearish head and shoulders pattern, and we might see that silver could be on track if the 30 US dollar level is being broken to basically weaken even further. Same is true with gold. Gold prices have already kind of started to depreciate. Same story, gold prices might weaken as well further. Please guys, don't forget to subscribe to our channel if you like the videos. If you have questions in regards to me or some of the assets, or if you have any comments, in particular crypto markets, leave them in. I'm more than happy to get feedback from you guys' side and would answer, of course, as usual. Take care, happy trading, happy weekend, and check